Hello everyone, welcome to the Ichimoku.co daily stock market review for the trading day ending Monday, August 4th. Well, firstly to the S&P 500, and here we've seen a change of trend today, a candle that's made a higher high and a higher low. Previous day's trading, we saw the market trading within the Ichimoku cloud, finding support at that important 1925 level. It is a level that we've been watching for some time, and just below there we also have that zone of support that has been highlighted in yellow that the market traded into today and was strongly rejected from for today's trading and the previous day's trading. For the previous day's trading close of last week, we had an indecisive spinning top type candle set this market up perfectly for the buyers to come into the market. The downside momentum had all dried up with the market finding support within the Ichimoku cloud. The buyers coming in today strongly, closing with control, a white body candle, and closing outside of the Ichimoku cloud, suggesting now that we've had a change of the long-term bias from neutral back to the long side, back to positive. Now the thing here is though that what we want to see is some follow through following this, and this will give us a bit of confidence in the breakout outside of the Ichimoku cloud. So we're looking for a continuation of the higher high and higher low in the next candle. The problem for the buyers here, however, is that we will be interacting with an area of previous support which may now hold as resistance at 1955, and we also have the Tenkan-sen around that area strengthening the amount of potential resistance in that region, and we also have the Kijun-sen trading in the same region as well. So very solid resistance just overhead for this market. The other important thing to look at here is that we've had a change of the momentum in terms of the Chica span, which is what the Chica span highlights, the momentum over 26 period, and it's to the downside, and it's no longer supporting the bullish activity that we've seen the market trade up through the cloud with. So what we want to see is good strong upside price action from here to give us more confidence in the market trading to higher levels. Now we do have a bearish market in the medium and fast term time frames, with the market trading below the Kijun-sen and Tenkan-sen. And the thing to look at here specifically is the strong angle that the Tenkan-sen showed when we were trading off from these highs, and very sharply pointing down. And very often after we see a market that does that, when we tend to rally, we do tend to find strong resistance at the Tenkan-sen area. So we are expecting to see some strong resistance if the market does rally today. So some very important trading activity coming up for the next day. Now if the sellers do come back into the market, once again 1925 in the zone, which I've just extended through here, this zone of previous support in the market has potential to hold. But as we get in further into the trading week, if the market doesn't appreciate from here and we move sideways, the level of the base of the Ichimoku cloud is actually going to increase to meet the market. So there is a danger here that if we don't see some strong buying coming in, and if we see some weak trading, there may be potential for a breakout, probably towards the latter end of the week or the early part of next week. So some very important trading coming up over the next few days to a week. Now just taking a look at these one standard deviation Bollinger Bands that I like to use, and here we saw the squeeze, we saw the breakout to the downside. The follow through wasn't very good, an indecisive spinning top type candle, but the breakout was very solid, very negative breakout. The market is rallying, and what we're going to look for is potential resistance at that Ichimoku cloud, which is around the 1950 level. So looking for some resistance to come in there, and that coincides with that swing low from the 10th of July. And next, just looking at the MACD histogram and looking a little into the past here, when we were making this major high at 1991, we actually had a triple divergence with the MACD histogram. And here we have the first divergence at this point, another divergence, and only just slightly, and then another divergence where the market was continually making higher peaks. But the momentum oscillator, which is the MACD histogram, was making lower peaks, and suggesting that as the market was making these peaks in price action, the momentum was not moving, and the internals of the market were actually very weak. If we look at the extent that the MACD histogram has actually moved down, very solid downside here. So it's highlighting the amount of downside momentum that the market found through this breakout and the strong bearish breakout down below the Kijun-sen and the Tenkan-sen.